I'm going to show you on this video how I quickly analyze the charts. So I've put the indicators on. I've got my big arrows on the main chart. I've got my big arrow dashboard, which is showing me the different time frames, and I've got the symbol changer, which I have customized by, if you go to view symbols and go through all of these, you can click it. Grey is off and orange is on, so you can choose only the currency pairs that you want, refresh it, or reinstall the indicator once you've done that, and it will get rid of all of them and just put what you need on there. So you can customize that to what you want. So I've got my big arrows, I've got my big arrow dashboard, I've got my symbol changer, and basically all I do is go on the daily time frame. Start on my first one. I'm looking for these four here, 4 daily, weekly and monthly, to all be showing the same arrow. So Euro USD, they're different, so I ignore it. Great British Pound USD, 2 down, 2 up, so I'm ignoring that. Again, ignoring it. 3 up, 1 down, still ignoring that. Here we go. USD CHF has got 4 arrows, all the same. 4 daily, weekly and monthly, all pointing up. So I'm going to take my Fibonacci tool. I'm looking from the big arrow, it going up till where it broke the structure. So in order to see that, if you're not too good, draw a trend line from your big arrow. A little bit out there, but it's round about that point there. So it broke the structure, definitely broke it. So I'm happy that that's a clean break of structure. I get my Fibonacci retracement tool from the top to the bottom, and we can see now it's done the A to B, 0 to 100. It's retraced back down to this point here, which is the 23.6. It's shot all the way up, but then it's come back down and gone even lower than the 23.6, and now it's on its way up. I wouldn't personally get in this now. The place where I would want to get in that is anywhere around there, or even later now, anywhere around here. You can see if we go further up, each one of these candles is a day, so that's 1, 2, 3, 4, 5. 5 days there where it was bouncing around this area. So a full week it was bouncing. We can see that it's putting long wicks. It's hit the 23.6, so we can expect a big move. So if you'd got in anywhere around here, hopefully at some point after that, after a day or two, when it had moved well out the way, you would have put your stop loss in profit. You might have cashed out when you got up here if you was happy, or if it had come back and retraced, it would have took you out, but you would have had a little bit of profit. Then you would have watched it, looked again for a possible entry, and if you got in round here, you'd be expecting to ride it all the way up to here, maybe even higher. The next thing I would do is just jump down to the 4-hour chart, and on the 4-hour chart we can see that it came and did its low, it went up, it retested, but didn't go lower than what it had been before. So we've seen that, we've seen it on the daily, we've seen it come down. We jump onto the 4-hour, that's where it came down, watched on the 4-hour, made for it to make a higher low, and we would have got in here, and now we'd be riding it all the way up. Now at this point I won't get in it at this point because it's already in the middle of its move. I would be waiting, I'd be watching for it, wait for it to hit up here, and then be looking to see it create a new pattern to get in. So we ignore that one because it's already in the move. Take them. Again, we're missing AUD CAD because it's not all the same. AUD CHF looks all lined up, so let's have a look. Fib retracement, we can see that it's broke structure about there, so the retracement is going on from there. Now that's done the A to B, it's bouncing around a bit, and even though all the arrows are pointing up, I would still be expecting the price to come down to at least the 50% level before it's going to go back up. So even though the arrows are there, it's done A to B, I'm still waiting for it to make a C and then enter to get the D. So I don't want to get in this now because there's potential that it might shoot up, but it more than likely could get down to at least the 50% level. So if in doubt, stay out. There's plenty of setups, so we just keep moving on to the next one and find a perfect setup. There's no point in getting in a setup that isn't good. You know, there's no point in trying to force a trade when you know there's going to be plenty more coming on. So again, this one not good. We'll leave that. Leave AUD NZ. CAD CHF. Oh, this looks pretty good. All 4 arrows are pointing up. Big arrow is pointing up there. Fib retracement. We can see where it's roughly broke structure is going to be around here, I would say. So fib retracement from there. And here we go. A to B. Come back down to do the C, which has hit the 23.6 level. So we can expect it to go up. It's bounced, come back down, but not gone lower, and now it's still going up. If we draw a blue box on the C, drop to the 4 hour, and again, where we seen that C on the daily, it came down, it went up, it came back and did a higher low. So we could get in. This would be our entry point. Seen it go up, seen it come back down, not break it. That's our entry point. We'd get in there and ride it. I mean, we would have took some profit, and it would have come back down and took us out. So we would secure our profit above entry. And then we would probably look, if we'd got took out of it, we would have been looking again, which we could look here now. Let's drop to the 4 hour on that. And again, you can see here where we marked it up. Green arrow on the 4 hour, it's come, it's shot up. Potential that it might come back down, hit around this low, and that will be our perfect entry to ride it up. Cad Jpy, this is a nice one, so ignore that fib, let me get rid of that. So this one happened like here, it broke the structure, so we can draw that on like that. It came up A to B, it came back down to the 23.6, it went up, back down, went lower, 23.6, got in all the way up to the 161.8 level, hit that level, and then what happens there is, if the arrows are still pointing up, it's all aligned up, that D leg now becomes from there. Let me change the colour of that. So I've changed the colour of that now. So this was the A to B, came back down, made it C, did its D leg to the 1618, but now that C to D leg becomes the new A to B. So this is A to B, 0 to 100, come back down, made a C at 38.2% of the fib, back up, retrace, but did a higher low, gone back up, came back down, touched around the 50 again, and now we're expecting it to go back up to the 1618, which is potentially still 750 pips away. So you can follow this. That started on the 18th of March, so it's gone up, done the C, done the D, C to D becomes the new A to B, carries on, now from here shoots up to there, and if the arrows are still pointing up when it's hit this 1618 level, then this will be your new A to B here again. So this is a good trade. You could enter in there, you could enter here, you could be looking at entering now. You drop to the 4 hour, you can see the green arrows come up again. We're expecting a move up. Ignore that. Again, Euro AUD, all the arrows are pointing down. Big high, shot right down. Break of structure is around here. But this was a massive move there on that candle. Again, even though it's pointing down, I wouldn't get in here because it's just bouncing. I expect it to at least come back to the 50%, and then when it's around that level or higher, then I'd be looking to find a sell signal, as long as the arrows are still on, all four are pointing down. You know, this is one of them ones that you see it, and now I'm just monitoring it and keep checking it every day and waiting. When it gets to the perfect entry, I'll get in. There's no point in getting in here and then it retracing up there and taking you out or putting you in negative that you don't need to be in. Great British Pound, Swiss franc. So again, 4 hours pointing up, green arrow, look for a break of structure, so it's around there, draw that on, A, B, bounced around, come back 50%, entry, ride it up, just come back down, took you out, look for another entry in here, and now we're expecting to ride it up to the 1618. NZCHF, another one, look for it, break, say up there. Again, it's not come far enough down for me to be looking to get in. I would expect it to be down here. If it comes to here and shoots off, then whatever, I'm not getting in. I'll just leave it and I'll miss that trade and wait for a new one to come. But I'm expecting it to at least hit here before I'm looking for an entry. UK 100, already got this drawn on. A to B, still gone a little bit higher, bounced around, come down. You can see there the wick just hit the 50%, so we dropped to the 4 hour. You can see that wick there that came down, hit the 50%, and that's given a buy. So this looks to me like it's on its way back up now to roughly around 7,000, which is quite a lot, 150 or so pips. So this is a good one. If you can handle it, this is a good one to get in. Put your stop loss just below 50% level, let it ride. When you're getting good profit, move your stop loss into profit just in case it decides to come back down to the 38 or 23.6. Nasdaq, I'm already in this one from you'll see in the group, but I got in it at the beginning. So it's done the A to B, it's come back above the 23.6. I got an entry around here, around this point, and now it's coming down, and I'm expecting it to go down right down to around 9,700 roughly. So again, this is important. The arrows are important when you're getting in. So if you look and you're getting in at the C or the retracement of the C, this is where you're looking for the arrows. Once you're in the trade, it doesn't matter because it's going to show different. It's going to be bouncing up and down, but it's going to work its way down to the level. Bitcoin, I'm going to clean this chart up. I posted in the group, one to watch Bitcoin. As you can see, the arrows are all pointing down. It's just put a daily sell arrow on. So this is now making the A to B. Could be here, could be there, could be as far as it wants to be. So I'm in this and I'm just letting it roll, and when I think that it's going to turn around, I'll get out, and then I'll wait wait for it to make its C, get the retest, and then enter for the D leg. And that's it. It's that quick to go through everything, check all the pairs, check on the daily, draw it on, jump on the 4 hour to be confirmed, and enter. Make sure you move your stop loss to profit, protect your profits. It's better to take a little bit of money than go into massive negative or to potentially lose money. If you get knocked out of the trade, just keep watching it, and there may be an opportunity to get back in. If there isn't, it doesn't matter, you can just wait and find another trade. There's plenty of trades, plenty of setups that you can do.